Hello students, good evening again and welcome back. In the previous lectures we were discussing about the investment property, that is IAS number 40. So just a brief overview for that. Investment property means any land or the building or both which are held forward under rentals or the capital appreciation or maybe both. So this is the basic thing that the company or the business has any land, any building or anything related to the land or the building which they have for the rental purposes. The purpose is what? That they will get the rental, and it may be some capital appreciation in the future, or maybe sometime rental, sometime appreciation, or sometime both. Now, in the previous lecture we have discussed in detail that how to recognize it initially, what is the measurement and all these things. So we will continue the same thing. We have three main concepts here that are very important, either to include it in the investment property or not. First of all, the partial own use. There may be a property, there may be a land, there may be a building the owner is using. Like for example, 50% owner is using and 50% is used for the rental purposes. Now in that case, what they have to do, either they have to recognize it as an investment property or not. So the simple rule is that if you can measure the percentage means like a 60% is for the rental purposes and 30% is used by owner or by the business, means for the own use of the business. So in that case, so we can recognize it separately. For example, if the building has a 20 rooms, out of the 20 rooms, 14 rooms are used for the rental purposes and 6 rooms are used for the administrative or any other purposes. So what we have to do, we have to distribute that thing, the amount of that property, the 60% or the 70% which is for the rental purposes, that should be recognized as investment property, and the remaining 40%, for example, so that should be recognized for what? That should be recognized under IAS number 16, that is the property, plant and equipment. The second thing that we have, ancillary services. For example, if they have a hotel, or if they have some hostel, or if they have any other like a student staying there, or there may be some employed people are staying there, or maybe for the rental purposes. But there are some other services, like for example the services of the electricity or the water. Now again we have to see the percentage. If the value of the rental is the major portion, then obviously we have to write it as an investment property. But if the value of the rental service is like a 20-30%, but the other values like a providing of the internet or the electricity or the security or any other service, so that is like a 80%. So in that case, it should not be written as an investment property. So the investment property should only be written when the rental value is more as compared to the ancillary services. Now the third thing, there's a possibility that the company, the holding company is there, the parent company is there, and they have a different subsidiaries are there, or the child companies are there. So the child company can rent out some of the property to the holding company, or the holding company can be renting it out to the child company. So in that case, if there's any intercompany rentals, it should not be included in the investment property. So these are the basic three rules are there. Now, the next thing that is very important is related to the disclosure requirements. Now the disclosure requirements means what? That how these things or the information related to the investment property will be written in the financial statements. So we have two models or the methods for recognition. If you remember, we have a cost method and we have a fair value method. So in the cost method, what we have to write, that first of all the depreciation method we are using, the company is using for this investment property. For example, the straight line method or declining balance method, or they may be using the sum of year digit method. So which method they are using, so first we have to write that one. Then the amount of the depreciation, like a percentage of the depreciation, then the amount of the depreciation, and also the accumulated depreciation up to now, maybe for 2 year, 3 year, 4 year, they have already using it. So this amount should also be written in that. And also the life of the asset, that they have recognized it for 5 year, 10 year, 20 year, 30 years. So the life of the asset should be, and also the reconciliations means what was the value at the start of the year, what is the value at end of the year, during that year any disposals or the additions are there, or if there's any depreciation. So these adjustments are required for the cost method. So these are the disclosures. So some of the requirements are there. For example, for the fair value, like first of all we have to consider that is there any asset it is given on the lease and especially on the operating lease, so it should be recognized and they have to write it in the fair value method. Then they have to also write that which method they are using. The very important thing that they are using the fair value method or they are using the cost method. It is very important. It should be this main disclosure that which method they are using, the cost method or the fair value method. Then the next thing, classification in the different for the owner use. For example, if there is a possibility, like as you have already discussed here, that the partial own uses they are like a 50%, 60%, 70%, but sometimes it is not easy to recognize that how much is used for the own purposes and how much for the rental purposes or for the investment property. So if there's any confusion is there, confusion in the sense that it is difficult to classify that how much is used by own purposes. So in that case they have to recognize it, they have to write it in the disclosure requirement. Then very important thing in the investment property when we are talking about the fair value method, that there should be a value by the independent valuer at the end of the year, that how much that specific independent valuer, the third person, the outsider who has shown that the value, he has given a certificate obviously for this value at the end of the year. So that value by the independent valuer is how much. Then obviously at the end of the year when you have written the value, as compared to the previous year, there may be some profit or there may be some loss. So that profit or loss should be recognized in the income statement. Then these are some of the general disclosures are there which can be used for the cost method or for the fair value method. Like, is there any rental income? Is there any specific income you are receiving from that investment property in that particular year? So that rental income should be written. Then, is there any operating losses or any operating expenses are there, especially expenses like a maintenance expenses there, security expenses there, cleaning expenses. So if there's any specific operating expenses are there, should be written separately in the income statement, in the statement of financial position, and in the overall statement forward for the disclosure purposes. And again, very important thing, is there any restriction? Restriction means there is a possibility that you have mortgaged that property and there's any restriction to sell or for the use or any other restriction is there. So if there's any restriction, it should be disclosed. And also in the fair value method, the reconciliations like a cost method, that how much was the value at the start of the year, how much at the end of the year, during this year, is there any change, so any reconciliations are there, so it should be mentioned. This is the basic concept of the investment property, IAS number 40, that how it is recognized, what should be included, what should not be included, and what are the disclosure requirements. I hope you have understood the concept, but still, if you have any doubt, if you have any question, you can ask me in the comment section. In the next sections, in the next videos, we will discuss especially about the fair value method, that how it will be calculated and is what are the different adjustments related to the profit and loss. So it will be written in the income statement or in the statement of financial position, it should be